You were talking about money, right?
Separate yourself widely from the pack moving forward. That's something that you would be willing to have a discussion about.
Because they didn't get it.
They
were
probably
like, hey,
didn't get it. Yeah.
To follow up with your clients, to generate more leads. You know what I mean?
Always check to make sure you're recording.
The record.
Yeah.
Clap and I need to start over and all that jazz.
Oh, Lord.
Yep.
We're going 5, 4, 3.
Welcome back to another episode of Key Factors Podcast. I'm your host, Mark Jones, and we are powered by ReviewMyMortgage.com, the largest index of mortgage programs nationally. And on this episode, it's taken me a little while to get these guys on here, but I think all great things come with time. And this should feel kind of like we're sitting around a campfire at the lease, minus the liquor. But I'm excited to announce my two guests, which first, Marcus Laughy, and second, Andy Hilger. Guys, how y'all doing?
Doing great.
Doing great. Okay, good deal. So there's folks out there that listen to this show, that watch the show, and don't know who you are. So that being said, I want to give you guys a little bit of time to explain who you are, give us a little bit of your background, where you came from, all that good stuff. And then we'll talk about where you're going and what our topic of discussion is going to be.
Sure. Andy, go ahead.
So I'm Andy Hilger. I'm the broker of the Laughy Hilger Group. My real estate path started working for a home builder many, many years ago. Sold houses for several years, was a sales manager for several years. And at some point it was right to move on and, go into business for ourselves. And ultimately that's how we landed in the real estate world.
Okay.
Outside of work, I have 5 children, wonderful girlfriend, great life. Everything's going great.
Okay. Good deal. Good deal. Marcus.
Look at you.
Yeah, I know.
Yeah.
What's up,
Yeah.
Marcus?
Good to see you. So I was in the Air Force for about 7 years. That's what brought me to Texas. Wanted to get into sales. Started working for a major builder in 2000. Started out in sales, went through management, was a director of sales for Central Texas. And then 2012, left, decided to be an agent.
Mm-hmm.
Instead of being responsible for 90 people, I could be responsible for one. And then immediately, a lot of the salespeople, hey, I want to get my license. Andy was talking as well. And so we wound up forming a team, a group, and then we opened the brokerage about 5 years ago, Andy and myself. And
now known as LHG, and I've got the L and the H here.
That's right.
The rest of the
right.
group we left.
That's
That's
right.
right.
That's awesome.
But it's a wonderful group.
Yes, it is.
Solid,
Yes, it
solid
is. Matter of
group, for
fact, my wife, Kristen, works with you guys and enjoys your mentorship. And I knew she would, because for the folks listening, Marcus truly was one of the first agents that I had worked with that stuck like glue. Him and I did some very great things for consumers out there, not just first-time home buyers, but second and third and sometimes fourth-time buyers, investment and primary. But we've been working together for quite some time.
Long time.
And I like to align myself with people that are not just hustlers, not just working hard, but also those that love their craft, that are passionate about what they do. And I think it was shortly after doing a couple deals with you, you introduced me to Andy, and kind of the same thing. Found out I had a lot in common with Andy as well, including poker and all the other things that we do. But back to what I was saying is I want to align myself with partners that are experts. And for you guys having such an extensive background in the builder sales world, I wanted to bring you on to have a conversation about what the hell is going on with the builder world right now.
Yeah.
I know you're not in it anymore on that side of the tracks, but it's almost cyclical. History repeats itself. Same old. But this is something that I think we've never seen before. We've seen the crashes, we've seen things of that nature, but right now it's kind of up in the air as far as why are they doing what they're doing and what is it that they're doing, so to speak.
Yeah.
So with y'all's background, and please remind me, how long were you guys in management for? And you can say it, you were with KB Homes.
Yeah.
How long were you guys there?
It was like 5 years, right?
Okay.
I think it was more like 7.
For 2 years were just a blur.
I was there for 10 years and 3 years I was a sales guy.
Okay,
So,
there
yeah,
you go.
about 7.
Okay. So that being said, you guys worked your way to the top. It wasn't just sales counselors. You worked your way to the top, They had, and that was during the crisis, the first one that we all know about, which was am I wrong?
Well,
Yeah. It was
after that.
that was the middle of our
Okay.
management
Yeah.
career, because I can remember, like, when we started as sales managers, there was several in each division.
Mhm.
And when in 2008, 2009, when the market declined, a lot of people got laid off.
Mhm.
We just felt fortunate to keep our jobs,
Sure.
but they consolidated Austin and San Antonio.
Mhm.
And it went down to really just Marcus and I for
Right.
a while until they started to come back a little bit. Yeah.
So that being the case, are you guys seeing similar traits? Are you seeing breadcrumbs of what took place before, or is this completely different? And when I say this, I'm talking about inventory being short on the pre-owned side of things, then leading to now inventory being in excess on the builder side. Because I'm not seeing a ton of homes hitting the market on the pre-owned side. That, in my opinion, is still kind of slowly chugging along. But you look at the builder side, and during all of this crisis for the last 2 years, that was really one of the only options most had if they needed a home ASAP.
Right.
And then it turned into, it can't happen ASAP because we can't keep up.
Right.
Right.
So what's going on, guys? I mean, give me some insight.
Sure. And I think the big difference is in 07, 08, it was rough.
Mhm.
Every Friday there was layoffs at every company.
Yeah.
Mhm.
And you just see people walking around with boxes and wonder if it's going to be your office. Right.
Wow.
And fortunately, we were able to make it through. But we went from reporting, 50 sales a week, probably regularly, to the point where we had
Easy,
more than
yeah.
that. And we just kind of cut it off at 50.
Sure.
And then literally from the end of November to the beginning of December, we immediately dropped to negative numbers and ended that month with negative. And then it just like a faucet shut off.
Wow.
Now the market was good and it was hot, but not like we've been going through for the past 18
Right.
months, not even close.
Right.
And I think the big difference was, and we talked about it a lot, is the lending, right?
Yeah.
We had big issues with lending back then. You know, if you had a pulse and a good score,
Mhm.
you didn't prove anything. And then what's the first thing people let go? Their second homes, their investment
Correct.
properties. They
Right.
had adjustable rate mortgages where they were jumping up. And, you've talked about this a lot in the last couple of years. It's not easy to get a home loan.
Correct.
And what we noticed was when the market changed and everything was selling for so much over list, we had all these clients that went from, because we did a lot of first time buyers and down payment assistance.
Mhm.
And then all of a sudden we're like, okay, you got to go 40 grand over. And they're like, okay, well, where are you going to get the money? Oh, I have it. It went from people had no money at all to now all of a sudden people had all this
No
money to be able to
problem.
put
Right,
these deals
yeah.
together. And so these were very qualified people. And, the last 18 months to 24 months have just been crazy, especially for our veterans. We help a lot of veterans. So it's
Absolutely.
been really rough for our veterans. And the good thing about the little bit of a shift we've had is probably 75% of the deals that I'm taking right now on my listings are veterans.
Yeah.
So that shows me now they can get back in. They can be more competitive. There was a stigma about veterans and appraisals.
I actually wanted to talk about that for a
unfairly.
moment. Let's segment and let's not lose the path that we're going, but let's
Sure.
also caveat veterans. The perception on the listing side of what was going on, because I felt it too, had veteran buyers that it's like, how many offers do they have to put in to actually get one accepted, even though they're the highest and best?
Brutal.
It was happening.
Yeah.
And in my opinion, it's a misperception of what a VA loan requires of the property, what a VA loan requires of the appraisal. A lot of folks think that you're going to get a lower appraisal if you go VA. You're going to have these repairs that are tedious and silly coming from the lending side. And I'm here to tell you that's not the case. As a matter of fact, throughout the last 2 years, VA loans were bringing the highest appraisals. I don't know if they were just trying to prove the stigma wrong, but at the end of the day, I think they are the most experienced because you have to be in order to get certified to do those type of appraisals.
Right.
So it's just almost proving that it's based on the market condition versus whether it's a VA, FHA, conventional loan.
Right.
Have you guys seen that?
Well, and I think the other difference is the VA buyers are probably some of the most qualified.
Absolutely.
Really good credit,
Mhm.
obviously great job history. A lot of them just didn't have the money down,
Mhm.
right? And I was there. I bought my first house when I was an E3,
Right.
E4, and didn't have any money, but the VA is zero down, and I got some down payment assistance, and I was able to purchase.
Mm-hmm.
But you take somebody like that bids high and is ready to purchase the home, but doesn't have the money to make up the difference in the case of an appraisal shortage,
Correct.
and that's where some of them actually lost out on
Right.
that. And yeah, there was a stigma out there that, oh, we're going to have problems with the appraisal. But the bottom line is, if somebody's financing, they need an appraisal.
Right. You're exactly right.
Gotta get an
In
appraisal.
addition, I would even go as far as to say that even if you're paying cash, you're going to pay an extra $1,000 to make sure that your hundreds of thousands of dollars is backed up by something that proves that it's worth that money.
Right.
Right.
You know?
I think a big part of that problem when you talk about the VA loans and FHA was, remember, for the last few years, you get 10 offers and 7 of them have full appraisal waivers or
Mhm.
partial appraisal
Right.
waivers where they're going to waive the appraisal. Well, it says right on the document, this does not apply for government loans. So I think that's a big part of
Yeah.
it.
No,
Is
you're exactly right.
even, and we work through a lot of deals where, the buyer would commit to covering the appraisal
Mhm.
shortage, but it's not binding.
Right.
You're always going to have the amendatory clause that is always going to supersede, and the
Right.
veteran is always going to have the right to back out in the event of an appraisal shortage, no matter what. You know what I mean? There's no way to lock them into place on that. And I think that's a big part of it.
And that goes to show that there is plenty of power in choosing the right broker, because how many of your brokers out there knew that? Just saying, that you're on the money.
Thank you.
And most would argue with me on that and say, no, we're submitting an appraisal waiver. Okay, go ahead.
Doesn't mean anything.
Meanwhile,
right?
I'm on the other line with the buyer saying, go ahead and submit it, just so you know you're doing a VA loan or an FHA loan. You can actually get out of this
You're
contract.
still protected.
You're
Right.
still protected.
Right.
Right.
And unfortunately, it's when you're working with newer agents that are asking a friend, or in most cases, not asking the broker. They're asking a friend or another realtor, or they're posting in something like Shift Talk saying, hey, is this how it goes?
Right.
And then they take that as gospel.
Right. Right.
Versus actually knowing what TREC requires on the contract and how that protects them or doesn't protect them. And I think that is one of the coolest things that I learned in working with Marcus is he showed me how to, what I call, pencil whip somebody on the contract. It's making sure that whether you're on the buyer side or the listing side, that your buyer or seller are protected regardless.
Right.
And I don't know anybody that can dissect a contract like you still to this day.
Well, Andy and I have great attention to detail.
Yeah,
And,
absolutely.
and
You still
so-
iron your underwear?
Yeah.
Jesus.
So, and a lot of times I'll talk to my clients about that, and, we get an offer a certain way as a listing, and I would say, look, if I was a buyer's agent, I would do the exact same thing.
Mhm.
However, here's what I see in the contract that still gives you that secondary layer of protection, appraisal waivers, et cetera. And then when you're on the buyer side, you're doing everything you can to protect your buyer. So
Right.
it just depends on what side of the contract you're on, really how you're writing the contract.
That's correct. That is correct.
And ultimately, it comes down to how good is the agent on the other side.
Right. Okay, so sorry I went down that rabbit hole. Let's bring it
Sure.
back to what we were talking about, which is the builder side of things, and
Yeah.
seeing a new way that had remnants of an old way that had already happened, but it's still different.
Yeah.
And you were talking about how the folks these days, there's plenty of them stacked up, but the difference is most of these people are well qualified. Why? Because the lender has done their diligence to collect the documents up front, to run it through
Right.
an automated underwriting system, at least at the minimum.
Verified
Versus,
funds.
yeah, verified funds versus what we had in 2008, 2009, to where most of these folks, like you said, you got a pulse, you got a credit score, you're good to go. You can go buy 3 of them if you want.
Right.
That's not the case. We're talking about a lot of first-time home buyers. We're talking about a lot of people that this is their primary residence and could not find homes. But now there's plenty of them. And when I say plenty, I mean the plenty is actually coming from the builder side. I think you had done some research on.
Yeah, I've got those numbers.
Yeah, we can get into that, but go ahead and continue.
So I think the difference is 05, 06, 07, as we're climbing up, the clients, the people were
Mhm.
more speculative,
Sure.
right? They were hedging their bet.
Mhm.
And I think the last 18 months, the builders have been the speculative ones.
Right.
Knowing that if you build it, they will come.
Mm-hmm.
And that was true until May.
Right.
Literally May is when it shifted a little bit, and we're still deep into a seller's market.
Mhm.
So a lot of the media was, the hype of, oh, there's price changes and there's too much inventory. And we'll talk about the inventory numbers, but we're still deep into a seller's market. We
Right.
were just ridiculously deep into a seller's market nationwide
Yeah.
Right.
up until May, and that's what kind of created the frenzy. But yeah, these builders have laid down so many homes and really got away from the you can pick and choose and build
Mhm.
because they were taking 12 to 18 months to finish these houses, Andy.
Yeah.
And
Easy.
and so what did they do? They just, and the other thing was pricing. Pricing was going crazy.
Right.
So they would release this and the house was 40, 50 grand more
Mhm.
to actually build. So now they're losing money. So they're
Right.
hoping that they can get the client to cancel so they can put it back on the market for a higher price. And now the tide's turned a little bit where all of those homes that they were expecting to happen,
Mhm.
a lot of it has to do with the interest rates.
Absolutely.
The interest rates have gone up. I mean, we had people in the threes
Right.
at the end of last year who were building a home and now their interest rate is double.
Right.
They either maybe don't qualify or don't want to pay an extra $400, $500, $600 a month.
Right.
So now they've canceled and created additional inventory that was being built for them on top of what they already had. And you can go to these builders and they've got 100 slabs laid on the ground waiting for frame
Mhm.
packages. Well, those houses still have to go up.
Right.
And when you talk about the numbers, we ran some of the numbers, and I think it's the top 3 builders in the city have over 800 inventory homes right now.
Yeah.
That is
Wow.
a ton. As a matter
Wow.
of fact, last week I sold a final inventory home. When was the last time you saw a final inventory
It's been a
home?
while.
Yeah. Wow.
Year and a
And I'm
half?
Starting
It's
to
been a
see
minute.
them.
No,
on
you're
those
right.
lists. It's been a while. Yeah.
They're starting to come in.
And you mentioned it's due to interest rates, but I have to say, yes, 100%. When you go from 3% and what builders were selling is always going to be lower in the rate because they have more leeway because they're making money from both sides. They own most of the time either the mortgage company that's working with or they're working with a preferred lender that's also contributing to whatever it is that they're
joint
doing.
venture.
Joint venture,
Mhm.
correct. But you also have this other thing that you mentioned, but we didn't talk about, which is the supply chain, the inventory of wood, the inventory of those things that we need to build a home.
Yeah.
How much of that, and no one will ever know other than the ones that actually control that, how much of that was 100% accurate versus, okay, we're seeing that they're doing it and they're saying that, so we're going to do the same? Because in my opinion, the way that the market was going 2 years ago, right? COVID started and we thought the market was going to stop and it shot through the roof
In 2 weeks.
right away. So I would imagine that builders are prepared for things like that and buy their wood in abundance, in bulk, and have supplies ready to go. Now, once you run out of those supplies, obviously you have to depend on the supply chain and all that good stuff. But it was very easy for them to raise the price of all the homes to say, hey, supply and demand, everything went up. So
Right.
now we're going to have to pass this on to you. Okay, well, why don't you pass it on dollar for dollar versus we're going from 400,000 to 500,000, 350 to 450, et cetera, et cetera. We weren't talking $25,000 price increases. I mean, I saw some homes that, gosh, originally listed for 250, now they're 350. That's $100,000 difference. You can't tell me that the wood was that big of a difference.
Right.
Right.
You know what I mean?
Well, I mean, to the best of my knowledge, most of these builders operate to a just in time delivery
Right.
type status. So the foundation's poured on Monday and they want a frame package delivered later that week. Now how they pay for it, I don't know. Do they pay for them in bulk ahead of time? Can they hedge prices or use futures markets to adjust that? I don't know. Maybe they do, maybe they don't. But I think for the most part, most of these products are delivered. Builders don't have anywhere to store them.
That's true.
If there's extra items, there's no warehouse, there's
Yeah.
no location where you can put extra refrigerators or frame packages or
Right.
this or that. It has to be delivered at the time of installation, so or close to it. So if you break that, you know what I mean?
Yeah.
If you change that, you can see how that gets
Oh,
odd
absolutely.
in a hurry.
Yeah,
And
it
I-
starts stacking up really quickly.
Yeah, and I sold several new homes last year where I was running into that problem. Well, meter cans are delayed and this builder can only get 10 a week, so you're not going to get one for 4 more weeks. And
Yeah.
everything else is ready, but we can't close until we can add the meter and power it up.
Sure.
So we ran into several problems like that were supply chain based. Now, I don't know. That's not an area I'm educated
Right.
in.
And we won't know. We won't
I don't know the details
Mhm.
beyond that, but I do think the struggle to get those to get those products on the time that they're used to, it was a challenge for a lot of builders.
Sure.
Because that's been their model forever. They call it in, it gets delivered. The house is done, we call in the appliances. Foundation's poured, we call it in the frame. That's how it's operated forever.
Mhm.
And once you have a machine like that operating, it's not easy to just change the way it works in
That's
the middle
true,
of the game.
because you've got
It's
so
not
many
very-
moving
right.
pieces that are
Correct.
attached to that machine. That
Right.
makes so much sense.
And I'd like to add something on that. Yeah, and I think the difference is, yes, so pricing went up,
Mhm.
supposedly supply and delivery, demand and all that.
Right.
But what we know is they don't bring that price back down. So as they tell us the cost of lumber has come down, et cetera,
Mhm.
fuel for delivery, those don't come down.
Right.
But you know what makes it come down? Supply and demand of homes.
That makes sense.
And that's what we're seeing the builders go through right now, that they have such a huge inventory that the price adjustments are coming and are here. Not huge, but enough to maybe get people off the sidelines, because when we look at the rents,
Right,
You talk
right.
about people that have been on the sidelines, the rents jumped from $1,800 to $1,900 last month.
Wow.
$100 a month,
In 1 month.
right?
Yeah.
So and
That'll make you think twice about renting.
that's right. Well,
Yeah.
people jump off they go to the sidelines
Yeah.
because they're lethargic and tired of losing. So they
Sure.
go, I'm just going to rent for 6 months or a
Defeated.
year.
Yeah.
And then what does that do? That floods the rental market.
Mhm.
And so rentals obviously are going up. And
Yeah.
so now people are jumping back in again.
And that probably makes the most sense that I've heard, because there's not a ton of pre-owned homes hitting the market, but in the past 2 years, there were damn near none. And therefore, it gave the builder a huge advantage. Now, when you've got a normal amount of homes hitting the market, as mentioned, it's not a seller's market, but they're now hitting the market. They now have something to compete with.
Right.
So are you going to buy that brand new home if it's still $100,000 over the one in the neighborhood next to it that is priced $100,000, $75,000 lower, that's only 8 years old? Well, most people have a realtor that explains those things to them and looks at, okay, what's your time frame? How long are you going to plan on being in here? Are you looking at this from an investment standpoint or an enjoyable standpoint? And I use that quite often, because if you're ever putting in a pool, don't expect your money back. You better enjoy it.
Right.
And there's nothing wrong with that.
But the house should be both.
Yeah, I agree. I agree with that. Yeah.
Yeah.
Go ahead.
No, I was just going to add, I think on the builder side, one thing that's different I would point out now, and you compared to 08 and 09, fundamentally it was completely different. That was bad loans. We don't have that now.
Mm-hmm.
But the difference is, back then, builders built in the traditional way. They didn't just flood the ground with every home they can build.
Yeah.
Most of them were, a client comes in, picks out what they want, and they build them that house from the ground up.
And they waited their time for that to be built. Yeah.
And inventory homes were few and far between. Inventory homes cost builders money to sit on the ground. So
Yeah.
you didn't just have a bunch of houses sitting around for people to choose from. Selectively, builders would add inventory, but it wasn't a lot.
Yeah, you're
that
right.
I remember back
it
then.
was
wasn't a
only
lot.
spec homes for the model home, and then essentially spec homes came to be when deals started falling apart.
Sure.
Right, correct. So the biggest difference I see now is that business got so good a few years ago that most builders went to, you know what, we can't let a house get nowhere near finished before it sells.
Mm-hmm.
So most builders just started putting everything on the ground that they can.
Oh yeah.
It backed up to where it takes a year to 18 months to build a house. So that's going to make that building from the ground up process that much more challenging
Mhm.
to complete, that much more challenging to sell. So most builders went to where they just, started building a house as fast and as furious as they can.
Sure.
And for 2 years or 3 years, really, that worked. And they never had a house, like I said, seeing a final inventory home is kind of a,
Whoa,
like seeing a
whoa,
unicorn. Where did
yeah.
that come from?
Mhm.
Because they would never make it to completion before they would sell.
Sure.
And then now that's kind of changing. And so the big difference is how many homes are being dropped on the ground and how many are coming behind that.
Right.
And so what's going to happen next? You know what I mean? Because it really wasn't handled that way.
And that's a
wasn't
good
that way
question.
in 08 and 09. Yeah.
Your question, although it was kind of one of those rhetorical, I'm going to use it as the next point, which is what happens next. And there's some theories of economists that say this is a confusing period in our market because rates are higher than what they normally are. Are they going to go any higher? Are they going to stay flat? Are they going to come back down? Well, it has a lot to do with inflation and if that's under control and all that jazz. But no one really knows what's going to happen with that. But there are some that say this is a short period of time of a lull because you look at the amount of people that are coming to Texas,
Right.
that are sitting on the fence waiting for it to be okay to list their home. Most of those people need to sell. There's a lot of folks out of state also looking to list their home, but still waiting that want to move here. So some believe that there's going to be another influx in the next
buyers.
8 to 12 months coming to San Antonio, Texas in general. And then it raises the question of how did the builder not predict eventually that this was going to stop? You get what I'm saying there? Like if there's a huge uptick in what happened in the last 2 years, at a certain point, there's the good times roll. They only roll for so long.
I could answer that with
Yeah,
one
sure.
word: greed. You know, what I mean,
Yeah.
you know, once you see the demand is there and your product is going to be purchased for a premium,
Mm-hmm.
I mean, all these builders are going to pump as many of them out as they can.
Sure.
And yeah, should that be thought about? Probably so.
Right.
But I think it's easy to see it now as opposed to you're a corporation. Your goal is to make as much money as possible for your shareholders.
Yeah.
You know what I mean?
And that makes
It's a
perfect
different
sense.
mindset.
It makes
right?
perfect sense because
Yeah.
they probably did see it.
Yeah, maybe they did.
But
see
like
it.
you
And
said, is it greed? Maybe. Or is it capitalization on what is here temporarily? And then we go back to doing business as usual after we wind the storms of making sure we didn't overbuild. And I think what they're doing right now to ensure that they didn't overbuild is they're dropping their prices. They're giving out all these incentives on things that don't have anything to do with the property itself, like lower interest rates. I mean, I've got situations to where I've had many customers that we've pre-qualified that are out there shopping, and were looking at new construction, said, no, it's going to take too long. So they dropped out of that and they went to go look pre-owned, didn't find what they were looking for. Where time has passed. And now the builder's calling them back, offering these super low rates. And we're looking, and I look at today's average rates, and it's simple. Most anybody can do this. If you've got internet and a computer or a phone, just type in today's mortgage rates. Google has a tool that allows you to select the amount you put down, your loan amount, the state, and your credit score. And it tells you what the average listed rate without any points or anything like that to a consumer within those criteria. And what I'm looking at right now is 30-year fixed mortgage at 6.818, an FHA at 6.073, VA at 6.082, and USDA 6.25 almost. But I've got builders offering 3.99.
Yes.
I know how they do it.
Yeah.
Do you guys? I mean, how does that happen?
I
By all
assume a
means.
massive rate buy down for many thousands of dollars.
And when we talk buy down, is it really a buy down, or is it just giving up everything that is there to make the mortgage side continue to survive, if that makes sense?
Yeah, I've got a take on that.
Yeah, go ahead.
So ultimately, what's the builders? What are they trying to accomplish? Put a deal together,
Yeah, sure.
right? And money is money. Just like when we have when I talk to a seller and they're offering a certain price or closing costs, it doesn't matter to the seller. It's all the same dollar amount.
Sure.
And so we have one national builder that cut prices. They see it coming.
Mhm.
Andy calls it a race to the bottom because we saw it before where these builders chase it and we'll take a 5,000 and then another 5,000 and it's a race to the bottom
Mhm.
rather than just going, we're going to dump 20, 30 grand, keep the momentum going,
Mhm.
right? But what happens is when you take those adjustments, everybody who's already bought in the community is probably going to be upset because they paid $20,000, $30,000 more. Then you have these other builders, and the way it started is, in May when they started having people drop out because they were pre-qualified at 3, now it's at 6, and they either don't qualify or they don't want to buy anymore. Right now they're scrambling because more inventory. They've already got a bunch coming. Now they've got more coming, and then you have one national builder that basically reached out to all the backlog and said, "Don't worry, we got you," because it's better for them to buy down the rate and maintain their backlog.
Sure.
And we're coming up on the end of the year, by the way, so it's very important for shareholders to meet our numbers. And so they're able to maintain their backlog while a lot of other builders lost their backlog because they weren't buying down those rates. And I think they realized that was successful in maintaining their backlog. And they thought, rather than slash prices and upset current homeowners, why don't we take that same $30,000, for instance, buy down their rate, so now their payment is $400 or $500 less.
Sure,
right?
sure.
My veteran last week was 6.1, guaranteed 3.99. You and I did the math. It was about 32,000 we figured on a buy down.
That's right.
Paid all the closing costs. When I reversed those numbers for my client, it was about an $85,000 difference on the loan at 6%. So yes, it feels good to have 30,000 off on your house, but when you look at the deal being put together, your monthly mortgage, which is what a lot of people buy based on,
100%.
it's an $85,000 value that's costing you nothing, costing the builder 35, 40 grand. And now everybody that lives in the neighborhood is happy. We're keeping appraisals up. So now that particular builder has the ability to not do a bunch of price reductions because they put it in the deal. Everybody's happy, and they're maintaining the price and appraisals, because once you start slashing and those start closing, now you've got a backlog of a few hundred homes, and every house is going to get hit with appraisal shortages because you're creating the race to the bottom like Andy talks about, and you're creating it backwards. So by putting the deal together like that and maybe not reducing the price by a bunch, it still winds up being a better value a lot of times to the buyer,
and
to the current homeowners,
it absolutely
and
is,
to the builder. And let's face it, do these builders have 20, 30, 40 grand in profit that they can probably do?
I'm sure they
8
do.
to 10%.
Surely.
And, it's just on a spreadsheet, right, Andy? We went through it. It's what's the profitability? This is the number we need to be at. And that's where the pricing, and that's where those pricings came from, because as materials went up, it just changes numbers in that spreadsheet. If lumber went up $2,500, then you just adjust that number to make sure your profit is still the same percentage.
Right.
And so there's a lot of way to play with the numbers. And I would say, as agents and consumers and lenders, if a builder is offering 20, 30 grand off, well, what's it to them if we try to maybe move some of that money to Mark Jones and let Mark Jones do the rate and put the deal together maybe, and maybe that's better for the consumer. There's so many ways to put a deal together.
That's actually a great point, and something that I don't believe everybody thinks about, because I drilled into this thinking, okay, what are they doing? They've got plenty of profit over there on that side. They're trying to hold the price, which then doesn't affect the people that just purchased, keeps good taste in their mouth, all that good stuff.
And appraisals.
Moving forward, you're exactly right. All to be able to shift it to the lending side, which doesn't affect too much with the house and things of that nature. Now, are they not making what they normally do on the mortgage side? Absolutely. And the thing that now I think about, having just heard what you said, is I'm curious to see if they will run into regulatory issues. And the reason I say this is, on our side of the tracks, they do what's called a high price mortgage test. And if we are not in line with the rest of the area based on the credit score, based on the program, then we can't charge them that, regardless of what we're supposed to charge. Like, for example, if our rates are 5% and it cost you 2 points to get to the 5%, but the national average says that the 5% should only be 1.5, we can't charge the extra 0.5.
Gotcha.
So therefore, when we are looking at, and it is a situation of, like, if we get audited as a lender, they will look at two deals and go, okay, why did you give this person with the same exact credit score a 3.99 and this one a month ago was a 5.5? or 6%, etc. What is the reason there? And the builder's going to have to explain that this is what we did. And is that something that is on the up and up? Because truly, we've got regulations on our side, and they've got to adhere to those just like we do as well. I mean, if we wanted to as mortgage lenders, and it's similar to what I can't even say Quicken because their price is high. Your pure online lenders to where they're hiring folks at 10 basis points per deal with a salary, and they're just pushing paper and
No
getting you into
customer
no
service,
customers,
just
none of that stuff.
online,
Yeah,
yeah.
you're getting the bare minimum, but
Sure.
you're getting the best rate.
Right.
They're not even that low in rate right now. So you look at those things, and even they have to stay within line with us to a certain extent. We've got profit margin, which is why a mortgage banker will make more than a loan officer working for a bank. Has a lot to do with the skill level, 100%.
Sure.
But not even going down that path, there's only so much to go around with that. So if you're cutting all of your margin on the mortgage side, I think that can only happen with a builder because they still can make payroll to their loan officers because that's based off of what they normally pay, which is not a lot
Right.
per deal. And they're winning on this side. I'll relay it to the auto industry. Yeah, we'll lose money on this car sale. Let's say we lose $5,000 on the car sale,
Right.
but he's got to go to the finance department.
Right.
And we're going to whack his head off in the finance department or vice versa.
Yeah, 0% interest,
Mhm.
but it's over MSRP.
Yeah.
And so I think the way to look at it is and most builders have lending and title and insurance and everything, right?
Mhm,
And
yeah.
it's really, and Andy's going to talk about the control and the
Right.
ease and simplicity of that. But
That's the next topic.
But
by the way.
essentially, when you look at it, the lender has whatever their market rate is.
Mhm.
Let's say for my client, it was 6.1, just like he came in with an outside
Right.
lender. Well, if the builder has a pool of money,
Mhm.
probably doesn't affect the lending that much because they are certainly delivering that money over there.
Correct.
And so if they're offering to buy down the rate at a certain amount and pay all closing costs, probably isn't costing the lender that much because the
Right.
lender is just a tool to get more closings. Right?
Correct.
And so if the builder is offering $30,000, which is why I say we got to change our way of thinking, right?
Mhm.
And you and I have done this a lot in the past,
Yeah.
where maybe somebody needs some closing costs and they're offering a price reduction, but maybe we need 13,000 price reduction and 7,000 in closing.
Right.
Or maybe their DTI is a little high and we need to get their rate down by a half a point
You're
or
correct.
whatever. So we need to kind of work those numbers that work out best for our client,
Correct.
right? To get the deal done, which is what we're talking about. And so a lot of times I don't think it necessarily would reflect on the mortgage company because they are getting that money from the builder.
Right,
Now, if
right.
it's a mortgage company where they're not getting that infusion, then obviously that's a lot of red flags because how are they doing that?
Correct.
And for different clients to get different things, let's say from August to September, well, that's easily explained because builders have different inventory or different incentives every month.
Correct.
For instance, that 3.99 is now 4.25.
Mm-hmm.
Well, let me ask you why. Well, that builder's end of year is September.
Mm.
So my client is closing by the end of the year. We're going to keep the numbers up, which is what builders need.
Sure.
And now that we've lost the end of year, next year's important, but not as important as finishing this year. So the incentives are still good, but not as good. So when you have those closings and they look at those two, they're going to say, well, this person got this and this person got that. And what they did was they took a little from the rate, but then they offered more incentives in the home,
Right.
refrigerator, washer, dryer, those types
Mhm.
of things. And so once again, they're just putting the deal together. But ultimately, as we come towards the end of the year, a lot of these builders, either fiscal or calendar years are coming up September, October, November,
Mhm.
December. So Q4, I would expect these builders to get even more aggressive
Correct.
than they are now because they don't want to carry those to the next year.
And that's kind of where my line of questioning comes, is because we're rolling into the fourth quarter,
That's right.
and
I can't believe it.
it's going to
but
get real competitive,
Yeah.
and the amount of necessity we need for builders and the amount of ability that they have to finagle those numbers
Right.
is astonishing to me. Even if I wanted to, if I gave up all the profit margin on our side of the tracks, I still can only charge the customer so much for the rate. You want to buy it down to 1%? Sure, go ahead. Oh, I'm sorry, I can't do that. That's too much. There's regulations based on that as well. they have to just basically be giving up. And that's okay because we need them. But what it does is it gives more control. It gives more of a perception of that's the norm. How come they're doing it? Nobody else is. So now is it a form of steering? My goodness. It's like,
of course it is.
You see what I'm saying? Like,
Of course it is.
That's a little too much control that you're enacting. That's flirting the red line of, is that ethical, non-ethical when your interest rate is damn near 3 points plus the closing cost they're paying better than everybody else. And you have to add to that, if they're giving discounts, things of that nature, should this property not appraise for more then? Most of the time it appraises for the sales price.
Right.
Sure.
Weird, right? But yeah, that's something that I don't think we will fully ever understand unless we jump back into that world. And that's not somewhere I want to be. And I know you guys don't either. We're doing our thing. So we find ways to help our customers and just educate them with as much as we possibly can. So that leads me to my next question, which is, what's up with this control? Why do they want so much control? Where does it come from? And how do you guys, having been on that side of the tracks, educate your borrowers on that situation? Matter of fact, I was talking to the loan officers this morning in a loan officer meeting, and they were talking about their customers going to builders. And I said, how many of you guys have the conversation with them about this up front before they even say if they're going new construction or not? Go ahead and get that out of the way. But I did tell them, I learned this from Marcus and Andy, straight up. I mean, they went in gunslingers. They would literally submit an offer like, screw your contract. Here's a Trek contract. And then you guys get back to me whether you can do it or not type situation. And it worked for years.
It worked for many years. And up until everything got so crazy in about 2020, like we were talking about, I think we had a pretty good success rate of using an outside lender with any builder.
Right.
And getting all their incentives, usually plus a little extra.
Correct.
And that was always my goal. I'm a big proponent of keeping the financing and the seller separate for the obvious reasons,
And you would think that they're obvious, but we're in the industry. We understand that. I don't think, please elaborate, because I don't think it's as obvious.
Sure.
And let me put it this way. The faces in the room when I told this practice was like, that's, oh my gosh, I didn't even think about that. And I'm like, wow.
Yeah, no, I mean, it's so, and I believe there's even laws that have been passed to put in place, that financial, buyers' financial information is supposed to be kept private and separate. You know what I mean? And there's reasons for that, obviously. But the builders all want that control. And that's the term that's used when they talk about using their title company and their lender is control of the process. And I get it. When I worked for a builder, I wanted to be in control. You know what I mean? Right. It makes it that much easier to know who to get to solve a problem, to fix a problem, to make things work, and control the process.
Right.
There's more money involved for the builder as well. If you close with their joint venture or their owned mortgage company and their title company. So there's a lot of reasons they want to do it that way. Could I ever look a consumer in the face and tell them it's their best interest? No, I could not. And the reason for that is this, once you're showing your cards, whenever issues come up down the road, appraisal shortages, anything that might require us work out a problem or negotiate the deal, well, you've already showed your hand. You know what I mean? They know how much money you have. They know, everything about your financial picture. The seller now knows, and I can assure you it can and will be used against you for their benefit.
Yeah.
So now there's a risk reward in that. Like I said, up until about 2020, I had a great success rate of getting these deals done and using the lender I wanted to use, which is in most cases you guys. And that's kind of changed because everything's a risk reward. You know what I mean? And I explain it to consumers this way. This is your risk. the builder's going to know everything about you. You know what I mean? The appraisal comes in short $10,000. They're going to see how much money you have in the bank. You know what I mean? And that's how they're going to decide if they're going to help you with it or not.
No,
right?
You're correct.
And that's, is there a number of enough builder incentives that make it worth taking that risk? Probably. You know what I mean? That's what you need to decide. You know what I mean? If there's 3.9% interest or whatever it is, and there's just enough money out there that, you know what, we're going to have to roll the dice and we're going to have to do this.
Right.
Then if that's the case, that's the case. But in general, I try to avoid using a builder's lender for that reason.
Right.
I want to be in control. I want my buyer to be in control as much as possible. And you are truly kind of giving that up, when you go that route.
Well, what if I had a listing and you wanted to buy the house? And I said, great, Mark, my seller needs to see your social, your date of birth, how much money you make. She has a lender that's going to do the loan for you.
Yep.
And that way
send me your bank statements.
Right. Send me all that because I need to know all your personal private information rather than you have an approval with the lender that you've established a relationship with and just bringing it. And in the resale market, that's how it works. You bring me a verified approval. Now, as a listing agent, we'll probably call that lender, have a conversation. They can't disclose much, but normally we can sniff it out if they start hesitating. Then we can go, okay, I think there might be a little bit of a problem here. But normally the lender is like, oh no, they're good. They're bullets, as you like to say, and they've got the money. And I want to know that you've already got the pre-approval. They have the money right now. We're not borrowing it or selling goats or rocking chairs or whatever we need to do.
Correct.
And then we're moving forward. Whereas in the builder world, it is about that control. And we were there before, so we understand how that works. And it does help the builder in a case like what's going on right now. The market shifts a little bit and the builders freak out because they have hundreds and hundreds and hundreds of homes under construction. So what's the first thing they do? Reach out to the lender. How we doing? I know we're going to lose some.
Correct.
What's the fallout? Is it 10, 20, 30%? Call everybody and we'll meet next Friday and talk about it and let's see what the damage is.
Right.
And what we can do to keep those so that we don't have more inventory. But it's kind of crazy. There is a kind of a cost comparative, how much money are they giving me and what type of incentive? And if it's that great, then we'll do that. But appraisal shortages, which are probably going to start to occur more often.
Sure.
So when you have an appraisal
because
shortage,
you're still pushing that market.
Still pushing
no matter what.
Price increases are still up month over month.
Absolutely.
We're seeing 10, 15, 20% the last quarter.
Right.
Month over month, the prices are still up. Okay. Right. And so when appraisal comes in, I know if it's Andy or my client, and they call it, my client's broke.
Oh,
we don't have
broke.
two nickels to rub together.
It's right.
We're borrowing money from people we don't even know to try to get the closing costs.
Yeah.
So appraisal shortage, no, we have no money.
Yeah.
But if it's with the builder's lender, they look and they go, oh, they got 70 grand in their 401k. They have 15 grand in their savings. It's 30 grand short. Let's offer to split it with them.
Right.
Whereas on our side, once again, we talked about this before. Do you represent the buyer or the seller? We're representing the buyer. We have no money. What are you going to do about it, Mr. Seller?
Right.
And let them show their cards first, right? Now, some of them might stick to their guns. Unfortunately, builders can't keep taking hits on appraisals. So sometimes the deal won't work out because they can't reduce it if it's a bad appraisal, which happens.
Right.
And it's 50 grand off. They can't just drop it 50 grand because now they're setting that bar for the rest of their closings.
Right.
And so, there's a way to get there, but I think the difference is when you're talking about control and them knowing everything, your client can sometimes be at a disadvantage if they know everything about you rather than them having to call you, for instance, and you talk about what you can do.
I mean, first off, I want to say you got a damn good voice right there. Secondly, is what you're saying is if it's, let's say, dirt deal.
Yeah.
And you come to them with an approved buyer, a reputable lender.
Right.
That has everything. Check documents. Matter of fact, they've even pre-underwritten it in some cases.
This lender's closed several deals with me in this builder.
And the builder will say, we need to check that borrower too. Okay, wait a minute. For what? The home's not going to be done for another 10, 12 months.
Right.
But you need to check them to do what? Because in my opinion, anything that happens after the fact, borrower loses their job. Borrower's credit score changes because credit report's only good for 4 months.
Sure.
So whether it's under my management or theirs, what was going to happen was going to happen. So why in your side lender, how are you going to keep that from happening just by pulling their credit to see what they're doing?
There's two reasons.
Okay.
One, which I don't think happens as much.
Okay.
Over 10 years ago, how many people were in a credit repair plan? We've got a year. They're a 580. We can get them to a 680. So I think sometimes they're trying to weed those out. But if we're talking about a reputable lender that has closed and never lost a deal,
right?
Which, a lot of the ones you and I work with, we've never lost a new builder.
Not only that, but we've saved their ass a few times too.
So when they see it, they should know, okay, this is a real approval.
Right.
The other is once they pull the credit, now they have the information to reach out and offer their services.
Sure.
Hey,
And they will.
And they will. And so, and the difference is they have more leverage when it comes to that. So that's when they say, oh, I see, you're with Mark Jones. Oh, that's great. You have $7,000 in closing costs with him. However, we offer title policy and another $1,500 and we'll beat his rate, because it's easy to beat somebody's rate once you have it.
Absolutely.
So all you got to do is just, and every lender can do that, right? You have the authority to try to do that. And so those are the two main reasons. And I don't think the first is very valid anymore. I think years ago, there were a lot of lenders that kind of did that. And you're on a credit plan, and as long as you do what I say, in a year, you'll be fine.
Right.
I can understand why they wouldn't want to break ground on a house for something like that.
I agree 100%.
But I think it's mainly the second, to give them the opportunity to try to earn that business. I don't fault them for it.
No,
But I don't want them calling my clients unless my clients agree to it. And if my clients have worked with you, let's say they were 580 and they waited a year like they were supposed to, and they did everything that you told them to do.
Right.
Now they're here. So Mark Jones has done everything to get them there. And now somebody wants to ride in their chariot and try to take the deal because all the work's been done.
Yeah.
And so, and those clients can do what they want. We're not steering them, but we're educating them on who's provided that customer service, whatever lender that is, that's gotten them to this point, rather than just, letting all that hard work be gone. And now we're just going to jump the fence and go with this other lender.
Absolutely. And it's tough for me as a mentor, as a branch manager. The production side of things, I've been through it. At the end of the day, people are going to do what they're going to do. You dangle a carrot, they may take it, they may not. It's all about the relationship that you build with them. And there's some credit folks that we get them there and they say, you know what, they offer me the incentives, but you still did this for us, so we're staying.
I've had that happen a lot.
What I was.
Yeah, it happens.
That's
but
what I was.
You also have newer to the business loan officers and other loan officers that haven't established a relationship with these builders like we have, that get this happening to them. And my response was, you can't lose something you never had. But in some cases, not only did they have it, they got it to where it needed to be.
Yeah.
It leaves a pretty bad taste in the mouths of others that are advocating for these builders after building the relationship, and then it just being rug pulled out from under them. Like, wait a minute, isn't there plenty to go around still? Especially when you guys are making it rain over there type situation. Like, you remember those couple of deals when y'all were struggling that we got closed for you? And
Can I at least bring you my buyer?
Can I bring you them?
Right.
Yeah. There was a point where we didn't even want to bring them to them.
Right.
It's like, whoa, they're going to literally take them from us.
Right.
Yeah.
They're going to take
Well,
it
they've
from
got retention numbers.
Yeah.
And if their retention numbers get a little, they're expected to retain a certain amount of the business, which technically does make the builder's business more predictable.
Sure.
Now, if they had all these different lenders, it doesn't mean those loans aren't going to close. They just know that when they have that business, that they know it's going to close, and there is no, I wonder what's going to happen, because
it's closer projections.
Years ago, builders would just close up doors because they were getting in trouble, and they would just close up doors and disappear. And if you had 20 of those buyers in backlog, you were kind of screwed.
Yeah.
Right.
Wow.
Now you're scrambling trying to get those done. That's not today. It's so hard to get a loan.
Yeah.
That I can honestly say in my 10 years, I think I've lost one deal to financing. One. And it was yours.
I remember.
But it wasn't your fault.
Right.
USDA changed guidelines.
I remember.
Like 8 days before closing. It was fully approved. And their income
And what's
was like
funny is that
$700
person
a year
is
off.
still an advocate for what we do.
Yeah, and came back, and we were able to purchase a year later. It was devastating, but that's literally the only deal that I've lost to lending. People work hard, the lenders work hard, but I would say, if the lender's building value in what they do, and they truly understand what this lender has done and will do for them, try to call a builder lender on a Saturday or a Sunday. when you're stressed and you're freaking out and you don't understand, and you see on the news that rates are going up,
Right.
and you're like, what's going to happen to my house?
Mhm.
Right?
Or a Monday or a Tuesday.
Or a Monday or a Tuesday.
It's
But I'm
true.
just saying, or most people are working during the day, so it's 8 o'clock at night. You put the kids to bed. Now
Mhm.
you're talking to your husband, wife, partner, whatever,
Right.
and you're going over these things, and you're stressed. Right? They call their agent and they call their lender.
Yeah.
Most of the time, the agent's gonna answer, but if that lender doesn't answer, where's that value?
No, you're not incorrect. I mean, there's been like maybe one builder lender that I can say works her tail off. I'm not saying that the others don't,
I know who it is.
but like Casey,
Casey.
she's a badass.
Yeah,
I
she is.
really appreciate her. She's been on an episode before,
Yeah.
and she's got a mortgage banker's heart, work
does.
ethic, the whole 9 yards. But she just doesn't want to go chase business, and I don't blame her for that. But you have to also look at how can you provide the greatest, highest level of customer service when you've got 40 loans in your individual pipeline. That's a tough task for anybody to do, you know?
You have to be a monster
Yeah, for sure.
to stay on top of it and
Mhm.
provide the service.
Yeah.
You do.
It's tough. It is tough.
I think the most important thing is what you touched on earlier, and that is to educate the consumer.
Mhm.
At the end of the day, we're helping them make the best decision,
Mhm.
right? And so I think trying to educate the consumer of what to expect, what you're gonna see if you look at new homes and the way incentives and whatnot, what those risks are that we've
Right.
already talked about, and then what it's worth to you. Because like you say, we've had some clients go, "Oh, I'm gonna get a few extra $1,000 to work with the builder's lender and share all my information that I really don't want to share with anybody else."
Sure.
No, that's not, you know what I mean? We're going to pass. We're going to stick with what we've got. We're happy we've been taken care of, and so I think it's important to share, to educate and make sure that the consumer understands both directions. And at the end of the day, they need to decide what's best for them.
That's absolutely correct. I mean, that's a reason why I'm doing these podcasts is at the end of the day, the information's there. It's what you do with the information moving forward. But our guests, they're going to be experts in what they do. They're going to give you the raw behind the scenes of it. It's out there. Matter of fact, all this stuff we're talking about is out there somewhere already.
Right.
I was given an example earlier today that I was watching a podcast live and I commented, and this was probably 6 months ago. And I said, "Hey, what are you guys doing out there? Because we're getting crushed by builders." And this was up north. And their response, because they'll read the question, then they'll respond, was, "We're not having that issue. Our buyers are a little bit more educated and they understand how that works." And it was like, wow. So y'all don't really have to compete with them. They're like, "No, most of our buyers, if they work with us first, they use outside lending, and that's that because they know that there's no free lunch," is basically the term that they use.
Yeah.
No, that's right. And from a lending standpoint, I would work with and educate all other realtors that you work with on how, because this is all about to change.
Right.
Builders can't support and hold as
There's no
many
way.
houses as that are coming down the pike on the ground as inventory homes. It's not possible.
Mhm.
They're never going to change the message that you have to use our lender.
Correct. 'Cause it
and
works.
You have to go in and be willing to walk away. You know what I mean?
Right.
Like, I'll put an offer together, and if they don't take it, I'm willing to move on to number two. You know what I mean? And when I move on to number two, you just have to be willing to walk away if they're not going to be reasonable.
I agree.
And you know what? They'll be reasonable
Yeah,
when there's more
absolutely.
homes on
Absolutely.
the ground.
And I think,
Right.
like you said, when there's more homes on the ground, and it will happen because all those things happen cyclically. We're going to run out of homes when the demand is more than the supply. And then eventually it'll come back around the other way. How far down and how far up, that's kind of the new thresholds that we get to discover, like we just did in the past 2 years. We never
Right.
thought the values were going to increase that quickly.
Right.
We never thought that the inventory was going to get that low, you
Right.
know? But I mean, those are all good points. Those are all great nuggets for not only buyers, but also agents out there and brokers that don't know this information. So I want to move on, unless you guys have anything else
One
on the,
thing.
yeah, by all means, please.
Not trying to bash on builders.
No, never.
Probably
And that's-
30
yeah.
to 40% of my business is new
Absolutely.
construction. And it is cyclical, right?
Mhm.
Sometimes, like 1 year, I'll sell a lot more pre-owned than new because pre-owned is the value.
Yeah.
And then it swings, and then new homes become the value. And there are a few builders out there, national builders, that sell homes in spite of themselves.
Right.
No OSL, no outside lender. You must use our lender. We must pull your credit. No incentives.
Mhm.
And, kind of like the, hey, stupid, get back in line. There's people
Correct.
that want this house,
That's right.
And so some builders, they've got the perfect floor plan. They're in love with it. I'm moving forward with my clients. I'm going to educate them the best way possible. But ultimately, it's their decision. We're not steering them anywhere. But there are certain builders out there that are here to sell homes.
Correct.
And so right now, especially coming up at the end of the year, they have some great incentives, and some of them are tied to their lender, and that's okay. We need to go that way forward. But I think as the year continues to get towards the end, maybe October, November, that's when you can turn some of this stuff around and at least give them the opportunity. And I think as an agent, the first thing I do is go to the lender and say, exactly how much do we need?
Correct.
Because I know they're going to withhold title. We did this a lot in the years past where they say, well, if you don't use our lender, you don't get title policy. So I would figure out how much title policy is. And Mark would say, we need $7,500 for this. And I go, title policy is $1,800. So then I would ask for $9,300 in closing costs. And they would go, but we're not going to pay title. And I would say, no problem. And I would tell you, hey, we've
It's
got
already
it
in there,
covered,
baby.
right? And so there's a way to make it happen so that everything is still okay with your client if they want to stay with that relationship. Now,
Sure.
if they want to explore other options, by all means, apply with the builder. Let's the best person will win, and that's fine. I just don't want it to be forced.
I agree with that.
And so at our
wholeheartedly,
brokerage,
yeah.
probably 80% of our agents have new home experience, and we sell a lot of new homes.
Right.
And so millions and millions every year. And so this isn't a thing about trying to bash them.
No.
It's just a conversation about control and to educate people from your podcast on how you can guide people through the process so that ultimately they can get what's best for them.
Absolutely. And in that meeting today that I had with the loan officers, that topic was brought up. And the last question that was given, which was a stumper because it was tough for me to be transparent, but I always am. And the question was, let's say we get through the lending side, we get through all these other things, but how do you combat when they start throwing out realtor incentives, 5%, this and that? I said, that's tough because at the end of the day, if you were a realtor, would you not want to make your money, especially if you hadn't been for a little while? Kind of back to what I was talking about in the first episode that just aired, which is it tough to do the right thing even though it hurts you? And in those cases, if the deal makes sense and they're getting incentive on top of your additional commission, what's wrong with that? I don't see any issue with that. But it was tough for me to tell them, maybe you provide more value, build relationships with these realtors so that in cases that we've experienced before, the realtor says, give me my 3%, take that extra 1% and give it back to the buyer so that they can stay with this lender. I mean, that's happened with us in a couple of scenarios, and I'm not only grateful for it, but I can't really expect others to do the same thing because I don't know if you've known that realtor for a week or 3 years. You get what I'm saying? A lot of folks, it's hard to see past tomorrow versus the big picture of things.
Right.
Ongoing relationship versus you're only as good as your next transaction or your last transaction, excuse me.
Yeah, and commissions aren't set.
No.
They're not to be talked about as far as setting any commissions, but I can tell you that I charge, a certain amount from my clients, and I have several deals in my backlog right now that are substantially less than what I normally charge.
Yeah.
But I do not pass that on to my buyer and say this builder or this seller is paying less than my expectation of what I make and what I charge. And by the way, what you signed in the representation agreement of what my compensation is. Okay.
Technically can come out of your pocket.
I'm not going to pass that on, but ultimately they love the community. They love the builder. They love the seller. It could be a pre-owned. It doesn't matter. Whatever's good for them. So if they're happy, we're moving forward in the process, regardless of commission.
And that's a testament to not only who you guys are as people, but it shows why you're still doing well despite the market the way that it is, because you've got repeat customers that tell other people that say they did over and above and didn't have to. That's why you should use them. And that speaks volumes because at the end of the day, some will, some won't. So what? Someone's waiting.
Right.
We talk about this all the time. One of the best things of going from working for somebody else to working for yourself is you get to make the decisions and I get to do whatever I think is right.
Yeah.
And it's a amazing feeling to be able to do whatever I think is right. And that's what I'm able to move forward with. And nobody else gets to dictate otherwise.
Right.
And sometimes that may be, selling a property that doesn't pay as much as we would expect it to, but the client's happy. They love it. That's no problem.
No,
That's,
you're not wrong. You're not wrong.
Yeah.
So that's enough of what some believe is builder chatter. What is that? A phone in the
That's
background?
my phone.
Oh, okay, we're good.
We need to turn that off.
It'll keep going.
Yeah.
JC, you think you can throw that phone out the window? I'm just kidding.
Just push stop.
It's
Those-
probably an alarm.
They are. That's what keeps me going.
It's an alarm. It's right over the top of the chair.
Sorry about that.
That's okay. Yeah, go through. You're good. We're gonna air all this. Everybody, that's JC's booty. That's awesome. So as soon as he done, you got it. You should just hand it to him. Just hand it
It's
to him,
okay.
just
Okay.
in case. Okay,
It's fine.
I turned it off.
I'll look at it later.
Yeah.
I'm sure it's something important. Not as important as you.
Sorry, guys. That's love, y'all. So now that we, and again, I want to preface, we're not here to bash builders. We're here to inform customers. We're here to inform and educate other agents, other brokers out there, other lenders out there that may not know the difference. And if you happen to stumble upon this show, well, lucky you, right? But there's a couple of other things that I want to talk about. We've already talked about builder incentives. We've talked about the control that they have, the benefits from going with them as a consumer, the benefits to the builder, why they do that. We've talked about the crazy incentives that they're throwing out and why, but I want to talk about what the future of first-time home buyers looks like in your opinion. I mean, I grew my business with a lot of first-time home buyers, and the loan officers that I lead are doing similar or the same,
Right.
going after the first-time home buyers, educating to get their first goal accomplished. But I can't say it's looking bleak. It's just kind of what's going to happen if you have home prices that are a bit out of their range,
Yeah.
rates that are also higher. And most of the time, first-time home buyers, I can't say that they're prepared, but they are underestimating the amount of money that you need this first time to go around, especially in today's market. What do you guys think is going to happen?
I think people need to understand there's a new norm,
Yeah.
right?
Okay.
With rates, when we talk about the inventory, and I forgot to mention this earlier, yes, there's less pre-owned going on the market. And I can tell you in my case, most of my listings are move up, move down buyers, meaning
Right.
they're going to list and then they're going to buy.
Mm-hmm.
And for a couple of months after May, when it kind of shifted a little bit, I had many sellers and we had planned on listing.
Mhm.
And the first thing they said was, I'm at 2.5 right now. I can't
Yeah.
go to 6%. I need to wait a little bit and see what's going to happen.
Yeah.
Right. And so we've been talking about interest rates going up for years,
Mm-hmm.
but it happened.
Yeah.
And
It did,
everybody's
in a
like,
big
oh my
way.
God, I can't believe rates are up.
Right.
We've been talking about it forever. Like we should have, I don't want to say we shouldn't have been in the twos. It's great that we were,
Right.
but it was ridiculous to be at 2 and 3% because for years we've sold and people have purchased homes at 5, 6, 7%, and it's all
Mhm.
part of it. But then you compound that with the pricing going up,
Sure.
then that makes it difficult. But what is their option to rent? We just talked, rents are up $100 a month from
Mhm.
last month. And the less people that buy, especially first-time buyers, is going to push them into the rental market even more, which is going to what?
Raise them more.
Drive up those rates.
That's right.
Right. And so I can tell you, and you helped me buy my current home I'm in
Mhm.
7 years ago. And when I took on that payment, I thought, man, it was $500 more than my previous. And I'm
Right.
like, man, that's a big chunk. But being in this line of work, I thought, but in a couple of years, I'm going to think that's not so bad.
Right.
Right.
Yeah. Because everything kind of catches up. And then
So-
you also are rising with that in
Correct.
value and everything else.
But my principal and interest stays. Taxes get adjusted a little
Right.
bit, homeowners insurance a little bit, but pretty much my payment
Mm-hmm.
has stayed within $100 over the last 7 years.
Right.
Okay. And so I made out by buying 7 years ago, not only on price, but now, that the payment on that would be substantially higher, never mind the rate.
Yeah.
And so I think that first time buyers just need to consider what their budget is, what their comfort level is, what their time frame is, They get that education from you as a lender, and then they need to decide what's right for them. But at some point, unless you're making significant changes in your life and income level, you could miss that window.
That's very
could
true.
happen.
That's
right?
very true.
And so at some point, you just need to decide, if it's a sacrifice you're willing to make to jump in, so that 5 to 7 years down the road now, you're looking at it going, man, that's a good payment.
Right.
It was a little tight at first, a little uncomfortable. And it can't be too tight because you wouldn't approve them.
I agree.
Right?
100%.
So it's not too tight. It's maybe a little uncomfortable.
Yeah.
Right? Because we like to go on vacation. We drive nice cars, etc. And so there can be certain sacrifices that people can make because you're not going to let them borrow more than they can afford anyway.
Correct.
And it might be a little uncomfortable at first, but I think that becomes much more comfortable as the years go on. And now, maybe 5 years from now, we're not talking about your rent being $2,300 or $2,400 a month. And now your mortgage is going to be higher as well.
Correct.
So, it is always the right time to buy. And right now they're with those sellers that kind of took a back seat because they need to buy something and they don't want to mess with those rates. Now, I think I had 5 listings in 2 weeks last month where people are like, okay, this is the new norm.
Yep.
This is the new
And
norm.
I think more
it's
are
5.5%,
getting that.
6.25%. And they're like, hey, I'm going to deal with it. I'm still going to make money on my house.
Right.
And I think that's where we're starting to get more listings where sellers are realizing this isn't a blip. This is kind of the new norm. Now, could rates go down a little bit? Yes.
Absolutely.
But if they go down, what do?
we refi.
We refi.
That's right.
But is the price going to go down? Generally, no. And we're still seeing month over month increases, right?
Right.
Now, we don't have a crystal ball. Could the market explode and pricing drop tremendously? Of course, but a lot of things can happen.
A lot
right?
of things have to happen in order for that to happen.
Correct.
Yeah.
But we're not seeing that happen, right? And so we're seeing more of an equilibrium, not even, because an equilibrium is 6 months inventory, meaning it's not a buyer or
We're not
seller's
there yet.
market.
Yeah.
We're not even close.
Yeah.
Last year was 1.2 to 1.4 months supply, which means if we had no more inventory, it would take us 1.2 months to sell through everything.
Yeah.
And then it jumped to, 2.7 months in July. And this morning I was running the numbers and I think we're at about 3.3. Right. Which I personally feel like that 4 to 5 month inventory is actually
market.
a good, healthy market because it's a slight seller's advantage. And I know buyers might go, oh, seller's advantage. No.
You're about to be a homeowner.
Correct. Because those listings will take 3, 4, 5, 6 weeks to sell, right? Now, some will pop the first day. It's perfect. It's beautiful. It's got a pool and you have multiple offers. But in general, most of those sellers will help with some closing costs. They'll help with some pricing, right? And so it's kind of where that deal where everybody feels at the end of the day, I got a good deal. I got a good deal selling. I got a good deal buying.
Absolutely.
Right. And I think we're getting very close to that.
I agree. And this may not be super popular amongst lenders, but I'm going to give you some advice that most won't give you, which is if you are a first-time home buyer with a chunk of change to put down, ask the seller if their current loan with probably a low interest rate is assumable. Therefore, you bypass all the current lending requirements that you need, and you basically go to their current servicer to get that switched over to your name.
Right.
You've got to put, now, mind you, the reason why I say you've got to have a chunk of change is because the seller's not going to drop their price for you to also get advantage on the interest rate.
You got to pay them their equity.
You got to pay them their equity,
Right.
and then the remainder moves over. But
Sure.
if you're looking at a situation to where you've got 20%, or maybe you don't, but you have the ability to get a gift for it, things of that nature, instead of putting that 20% down on the property, give it to the seller and find out if their loan is assumable.
Right.
Like I said, lenders may not like that, but that is the truth. Those things are out there, but no one wants to preach about it because we get greedy. Hey, let's not tell them about that because maybe they won't use us as their lender.
Right.
Well, how about give them that information, and chances are they won't end up using that because it's not an easy thing to do. Is it possible? Absolutely. But now they know that you're on their side. You're in their corner. You've got their best interest.
Right, exactly. And if it doesn't work, if it doesn't mean a deal for the financing group or the lender, they end up going that route. Well, now you're in a position to say, look, we can't, obviously we can't do the loan here, but we would like to be your loan partner for your whole family going forward. You know what I mean?
Absolutely.
And
if they leave you after that, they're just a bad person.
Right.
Just kidding.
And they know they can trust you to do the right thing for the long term going forward. And that's way more important than one deal.
I agree 100% with that. No deal, one deal is worth not giving the best advice.
Right.
And that's, in the last episode, we talked about how difficult it's going to be moving forward for the agents that aren't doing a lot of business coming in contact with sellers or buyers to give them the real raw data, raw information and advice that may not benefit them as the agent. Meaning, this person is a buyer and they may or may not be here a year or more. And they may or may not have the ability to hold on to that home after they end up being relocated. They know that in advance. I wouldn't advise you go and buy a home, truly, unless I knew that if you had to move within the year and you could sustain that property and rent it out to start your investment and whatnot, I knew that that wasn't a possibility. I'm going to tell you, it's probably not in your best interest to buy. But you tell that to the agent that's been working showing them homes, and they're going to go, well, what the hell are you doing?
Right.
You're raining on my commission.
Yeah.
Right.
And I'm like,
well, I mean, that's the difference between somebody that's just trying to collect a paycheck and somebody that is trying to run a business for years to come, that they want their clients to know they can trust them, that they're going to do the right thing.
That's true.
No, I mean, I think that's the case, though. I mean, there's a lot of people out there that just, for whatever reason, need to get a deal done today. You know what I mean? And there's a big difference there. There's a big difference between somebody that wants to help you sell this home, buy this home when the time is right, wants to be there to sell it for you in years to come, and you're the same way on the financing side.
Absolutely.
And that's two different types of services, And
it boils down to, are you a salesperson? Whether you're lending, realtor, doesn't matter. Are you a salesperson? Or are you striving to become the expert? And I think this industry, by way of default, is starting to weed out the salespeople and leaving the experts left to do what we do best, to be honest. It's been the same kind of constant MO in every single one of these discussions that I've had, whether it be credit repair, a realty team, brokers, all of that stuff. But you're finding out that the message is still the same, which they need to focus on working with an expert. As a matter of fact, when we have borrowers that come in, and we still do a lot of consumer direct, but they're coming in from Houston, Austin, all over the place, and we can still help them with financing. But the first question we ask, and I train the loan officers to ask, is your realtor that you're working with full-time or part-time? And it's an important question to us, because if they're part-time, guess who's doing all the work on that deal? And not just work, but the advice when asked. We have to give our expertise or our opinion on it. Now, is it our fiduciary responsibility to give real estate advice? Absolutely not. We're not the realtor. We're not acting in that role. But what's your opinion on this? Well, we're going to give it. We can't do that on every single deal if there's so many part-timers that don't know what they're doing. I'm not against people jumping in the industry to do this as their job, their career. There's a huge
difference between somebody who's new and learning and somebody who's been around forever and still doing one deal a year and can't even keep up with the changes of the contract, never mind the changes of the market.
I agree. Wow. That's powerful, right there.
It's a very tough business to try to do part-time. And we get the question a lot.
Well, not in the last 2 years.
Well,
last 2 years, everybody and their mother had.
No, I disagree.
Everybody and their mother.
I disagree. They may have some deals. Are they providing the service level that they should be?
No, not at all.
Okay, that's my point. So, for the last couple years, can you be a real estate agent and have friends and family buy some properties and you get attached to it? Yes, sure, maybe. Yep. But that's not how this business works.
I agree.
And, what I tell people is, okay, you have an 8 to 5 job. Here's the challenge you're going to have. So you sell a house on the weekend. You're going to show houses on the weekends and you're going to sell them. That's great. Well, the inspection's going to be during the week, Monday through Friday, 8 to 5. The bank that you need to talk to, the title company, all these partners you've got to talk to manage that transaction move it forward. Guess when they're working? Monday through Friday, 8 to 5. You know what I mean? And if you're not...
A lot of agents.
Yeah.
Full-time agents.
Yeah, full-time agents. That
you get a voicemail. Call me tomorrow morning.
They're not going to want to deal with you on the weekend because they're working every single day.
Right.
You know what I mean? And so, you run into a lot of that you're really handicapping the service you can provide by not being able to, pull out your files. It should be part of your daily process. Every file under contract. What do I need to do today? Oh, I need to check and see if the appraisal came in on this one, and send it, whatever the case may be. But it's a daily process.
Oh yeah.
And if you're not doing that, can you get by? Sure. Are they going to go tell their friends and family how great their agent was, and you have to use market? You know what I mean?
Yeah.
Maybe not. That's what you're.
I mean, in
losing
the
there.
last 2 years on the lending side, we see a lot of opportunity for deals come across our desk. In addition to the ones that I manage and all that good stuff, you hear a lot of my cousin is the realtor, my mother is the realtor, and it's part-time.
Right.
And there's issues that take place. And at the end you go, okay, well, did you benefit from that? And they go, well, yeah, they gave me 1% of their commission. And it's like, man, you went through all of that for a piece of the commission that someone else is paying anyway. Didn't come out of your pocket, none of that stuff. And put yourself at risk. And do they tell more people? I don't know. I mean, some of them are still around, but I think they're quickly finding out that that's not the case, because we're turning into a market where you do actually have to be an expert and sell at the same time. They would just take them, drop them off at a builder and go, I'm done.
No, they pick up the phone and call the builder
And send them there.
Yeah.
Wow. Yeah.
My aunt's going to be
true.
there.
One of the most frustrating phone calls you can ever get in real estate. It's happened a couple times, and I guess if you do this long enough, it's always going to happen to somebody, is to get a call from a past client that says, I need your help. My cousin got their real estate license, and I wanted to, help them out, and I let them show me houses and sell me houses, and now X, Y, and Z has happened, and they don't know what to do. And, you
want to so bad. Yeah.
Well, no, the problem is it's a fiduciary relationship. They're under contract with that person, and you have to say, look, I'm sorry, but I can't really help
advise
you
you here.
You've got to call your cousin. You know what I mean? And you have to explain that awkward conversation to explain why, yes, I know what needs to be done, but I can't really help you. You know what I mean?
Yeah.
It's a really frustrating feeling.
I never really thought about that from the realtor side versus the lender side, because we can give advice. We're not the same fiduciary responsibility, because there's nothing that we sign that represents the buyer.
Right.
You can switch lenders anytime throughout the transaction. And truly, we're giving the best advice we can, hoping that it actually does maybe fall through and we get that opportunity. But if it doesn't, at least we gave the right information. Whereas you guys, you give that information, even though it's the right information, you could end up in a lawsuit.
Sure.
Yeah.
I don't want another agent advising my client.
Yeah,
exactly.
Wow. Once you,
I never really thought about
once you
that.
know, as an agent, when you know somebody's under contract with another agent, you're really not
Hands
supposed
off.
to. Right. If they come to you, if they're coming to you, I think there's some language of what you can and can't do, but I've never even dug into it.
Yeah,
you know
there's
what I
no
mean?
need. You're right.
So
You're right.
Stay
out of the weeds. That's what I call it.
Yeah, it's they've made their decision. They've hired who they want to hire
Hell
to do that
yeah.
job, and they're going to have to,
Well,
figure
we've
it
talked
out.
about a lot here. We've probably got, I don't know, maybe 15 minutes of figuring out what the hell's going on with this and that we got fixed, and hopefully we'll be able to edit out. But if not, oh well, it makes for good content. Let's see here. I wanted to talk about the HMDA data report that came out that shows the savings that a borrower has just up front in using a mortgage banker, mortgage broker versus a bank. The number is like $9,000, guys. I'm just going to say it. Finding the best lender, online, referrals, builder control to the market. I mean, we've nailed it all. Guys, what else is there that we can end this with? Is there any advice that you can give to new to the business agents, to seasoned veteran agents, or maybe lenders? Who knows? But this is a moment where I want to give you to educate, to whatever you want, whatever you feel like. If you want to promote your shit, do it.
I guess I would say what I was telling you a little earlier. If I look back through my career, there's been a couple of spots where the market softened and got a little tougher, and maybe it will, maybe it won't, who knows. But as I look back, the answer has always been to buy the real estate. You know, even in times when me in the business couldn't necessarily see it. I told you that story about canceling very, very large transactions in the spring of 2020 when everybody's commercial transactions, everybody's freaked out about the coronavirus and you know, and business is down and shut down. We can't even open. We're going to have to walk away from this deal. And, you know, I can't even come up with an argument for that. Hey, I understand. I get it. You know, we're going to walk away. And the answer was to fight and buy the real estate because prices have gone up many, many times over since then, you know, and it would have been a great investment at that time to close on any transaction. And that's just one example, you know, even in 2008 and 9, people that were pulling out of the market, you know, if they were going to stay in this house for a year or two, maybe that was the right decision.
Sure.
They were going to stay, if they were going to stay in it for the long term, it's a very bad decision to walk away back then at any time. So I've kind of come to the conclusion that no matter how tough of a time I've seen in the past, the answer has always been to move forward when it comes to buying real estate.
I mean, that's great advice. And if anybody wants to double check what he just said, go to the Google machine and type in historic home values and zoom out. That's all you got to do.
Yeah.
That's all you got to do. You pick a point on that map, and anytime in the past you look at current situation, it's higher than what it would have been.
Correct.
Right.
Any way you look at it. How about you, Marcus?
You know, I think, you know, looking back, you know, actually when we opened the brokerage, it was my wife, Shanna, Andy, and myself. And I've always been like a 2-year-old. Why? Everything is why. And it drove her crazy, and we would fight about it because she was an agent before me. But leading me to what I'm about to say is you need to surround yourself with experts, whether you're a lender. I had a title company, one of my title partners called me the other day asking me questions about the contract, option period, and how that works, you know, so I'm their resource.
Right.
And as an agent, you need to be the resource of the resource, right? And so you need to have, you know, a lender partner or partners that you can call even when it's not their deal. I harass you all the time.
Absolutely.
Does this sound right? Is this something I need to be worried about? How does this work? I called you on the incentives. How the hell are they doing this? And we worked it out and figured out how, right?
Absolutely. And my advice was they need to do that.
Run, do it.
They need to do it now.
Press hard, 3 copies.
Yes.
Yeah. And, you know, title experts, you know, when you talk about listings and we get, you know, unfortunately people pass away and you've got probate. And so a lot of times we'll lean heavily on, and I'll give a plug to Nefi Miramontes, right? We're all calling to harass them about things before I ever list because I want my clients to be comfortable knowing that we've done all the homework up front and we're not going to have a disaster by going under contract and then going, oh, I didn't know we had to do that. Oh, it needs to go through probate and we have all these delays and now we've lost the buyer. And so I think when hiring somebody, whether it's a lender or title company or agent, you know, in this career field, that you want somebody that's going to have a good team and somebody that's, you know, and I won't even talk about part-time, full-time, but somebody that's dedicated, somebody that's experienced. And, you know, it could be a 1-year agent. I had a very successful first year, but it's because I was a toddler and asked why about everything.
You were hungry for all the info.
I was so worried that it was going to happen to me.
Yeah.
And so the office meetings were so critical as people were struggling. And when you and I first started working together, I wanted to know everything about every loan program. And I don't need to be the expert, and I want them to talk to their lender about it, but I need to know enough to be dangerous.
Yeah.
And enough to call BS when I hear it.
Yes.
So that if the lender is saying, oh, we can't do it because, then I call my buddy Mark, and Mark says that's BS.
It's really because of this.
Correct.
Yeah.
They don't want to do it.
Right.
And so I would say, you know, people should work with a team of experts. It's not just about the one person you're hiring, and that when you have a solid team like that, and then Andy and I bounce ideas and always have
all the time.
We've been partners since we were managers back in the day. So, you know, for 17 years now, probably. And so you need that resource and those things that you can bounce off of people to make sure you're taking care of your clients, because at the end of the day, that's what's important.
I tell you what, guys, that wasn't bad without the whiskey, huh?
We're going to act like we didn't have any?
Okay. That's awesome. That's awesome.
I got it.
So all the listeners out there, I hope you got something from this. There were plenty of nuggets to choose from, but more so the realtors, the lenders out there. Make sure that you are educating your borrowers to the best of your ability, despite what incentive you're being provided, despite what kind of agenda that you think there may be on the table. If you constantly do what's in the best interest of your customer, you should have business for many years to come. Simply because people like other people that they know, like, and trust, and that trust piece is so important in a market today. Key factor of this is education. Educate, educate, educate. There, in my opinion, is never enough education when it comes to the biggest purchase that you're ever going to experience at the moment. And make sure that you are working with that expert that is willing to do so for you. So I want to thank you guys for joining me, getting out of your comfort zone, because it didn't feel like you were uncomfortable at all. It's like you guys have done this before, haven't you? But
Appreciate
yeah, thank you again. And guys, hopefully we'll catch you on the next one. I'm Mark Jones. See you later.
You were talking about money market.
Separate yourself widely from the pack moving forward. Is that something that you would be willing to have a discussion about?
Because they didn't get it.
They
were
probably
like,
didn't get it. Yeah.
To follow up with your clients, to generate more leads. You know what I mean?
Always check to make sure you're recording.
The record.
Yeah.
Clap, and I need to start over and all that jazz.
Oh, Lord.
Yep.
We're going 5, 4,